Nice little intro we just heard then. This thing's getting jazzy, really. It's very TV-like. It's like we stole it from the ABC or something. But welcome back to the fourth session. We're getting a little bit more consistent with these ones now, Greg. Fourth session of the bi-weekly update. How are you feeling today, Greg? Drizzly day in Bondi. How are you feeling about?
I think it rains more than people give credit to in Sydney. Good, Lucky. Always good to sit down with you. Always enjoyable, and look forward to the content today.
Yeah, nice. Now, obviously, we have another guest here. We have co-founder of Global Prime and our boss, Jeremy Kinstlinger. So I guess we'll be on our best behavior for this one. Jeremy, do you want to say hey to...
You know you've made it when the boss rocks up, huh?
Yeah, I don't know about boss. But yeah, nice to be on the show. I don't really know why I'm here today, but I like this setup. It looks very interesting. So let's see how we go. I'll pass it back to you.
Nice. So, Jeremy, actually, I did want to ask you one question pretty much straight away. You know about this. I prepped you earlier. Regional Broker of the Year from TradingView. Is it an award that they came out with for 2021? Big year for Global Prime. I feel like a lot of changes were made. Regional Broker is pretty, that's huge for TradingView. It's probably the biggest, at the moment, still the biggest trading platform. Everybody's using it. Everybody knows what it is. So I'd like a few words about how that means to you guys.
Yeah. So look, we get approached every now and then to win an award, but it's usually you have to pay to play. So it's a bit of an interesting space. We've never done that. So yeah, it's nice to actually win an award where it's just been given to you rather than, kind of have to pay to get it. And yeah, it's very interesting. But TradingView, I'm a massive fan of. I've been using it for many years, and yeah, they do a great service. It's really, we're really happy to be integrated with TradingView. Our clients are loving trading over there. We're actually about to launch demo trading as well on the TradingView platform, and of course, it's cross-margined and cross-platform with Trader Evolution, so you can manage your trades on 2 different platforms, which is pretty cool. So yeah, lots of new products being added into TradingView and into other platforms as well this year. So looking forward to fleshing out a bit further. But yeah, cool to win an award.
So yeah, demo trading. Now all the traders can do the whole thing just straight through Global Prime on TradingView. Great developments. So now let's get to what everyone's looking for. It's Greg Rubin's little talk. First of all, I want to address one comment that we had on our last video. One of the people said the weekly update, he wanted more of an update on market directions and forecasts for the market before he jumps in and starts trading. And we kind of have an avenue for that, really. We have Greg Rubin's mentor room. Yeah. So I don't know, I guess what I wanted was just a quick couple of words about what you offer in your mentor room and if that is what this person is looking for.
So yes, my mentor room is very much divided into 2. We got the learning side where I teach people to trade via a structured program, and that's a set program where we got live videos, which we do, and we actually work on sharpening our skills. We do weekend charts, we do live videos, and we have that set program for members to learn to trade for themselves. And then it's the analysis side where I do daily updates across the instruments. I do continual updates throughout the day, share trade setups, share what I'm trading. So yes, that can be found in my mentor room, and certainly something I do offer there.
Yeah, perfect. Yeah, the market updates, I've listened to your live streams and you literally tell people, throw charts at me and I'll analyze it straight away right on there. So I can't imagine what better tool a trader would need than to have a mentor on their side to just double check what their thesis is.
So what addition to that, what we've started now is a weekend chart analysis. Cool. Where 2 members choose which chart they want analyzed, and then members spend the weekend attempting the charts. And then Monday morning, I start with a chart from scratch with nothing on it and show how I draw it up. So that has really taken off, members loving it. Yeah. And then I give special praise to the ones who got it right at the end, or the ones who have my count, doesn't mean it's correct, but have the closest to my count. And then that video serves as a great learning tool. So yeah, it's incredible to see the progress.
Can I ask a question on that? So you obviously teach people Elliott wave method. How close are your mentees, if that's a word? How close are they getting it after being mentored by you for a while in terms of getting those counts similar to to what you're seeing?
So there are two things. Elliott Waves in a nutshell is a roadmap. It's something that can be interpreted many ways. So I teach a certain method on how to use that sort of qualitative data into a quantitative plan. So into a structured plan, excuse me, into a structured plan. A lot that you won't find in a textbook. A lot of it is a methodology within that. So that's why you get so many different interpretations of it. So how close are they? Incredible. Like, if I'm being honest, I've seen returns posted from members and really, really impressive stuff. And then I can see from my work when I make errors or if I post something, immediately there's what about this or what about that, and they valid count, they valid potential. So it's not only seeing it in a narrow mind or what could happen, it's what else could happen or what else might be happening. And yeah, it's unbelievable the level that some of the members are at right now.
Do you want to name drop some of the clients that are doing well?
I think the room knows who the level is. Again, I mean, it's a process. You know, some people have been there for 2 years now, or a year and a half since I've started out. So obviously they would be further along, or you would expect them to be further along. Some newer members have come in and just picked it up off the back. So I'm not going to name members, but what I can say is the room is doing incredibly well.
Okay, so we will get into a couple of updates in the market now. So I wanted to start with the metals and the S&P market at the moment. So the S&P, I don't know about my analysis, but hit a retrace level and then it bounced a little bit back up. So just recently today, we're seeing a little bit of gains. S&P wise, how are you feeling about that market?
So last week we spoke about everyone saying the world's over, the S&P's topped out, and as maintained, I'm still expecting another one or two big legs to the upside before all's done. Still looking above that $5,000 level for this next move. However, I don't have confirmation that the lows of this current correction have been struck yet. You know, we hit the ideal levels, that 4,050 to 4.3 was my target when we were sitting at the top. And although we've hit those levels, I'd still prefer either a deep retrace from those lows and hold those higher lows, or one more lower to complete. So I think we're close. I think the S&P is very close to bottoming out if it hasn't already, and I'm watching closely. We currently reside at a level where, from my analysis, is fourth wave resistance, where I wouldn't be surprised if we turn down here one more time. But if we continue to push through to that 4,650, 4,7 region, then it's adding weight that the lows potentially have been struck. And based on the structure that I'm seeing off this current lows, which is not a clean structure, it would more than likely offer a deep retrace, so a test of the lows with a higher low before we blast off and go back to the bull run. So yeah,
it's always a good sign when you hear space terminology about trading charts.
Well, when we were going through the correction last week, we called those levels and we called the bounce. We've got that bounce. Now it's a matter of confirming it's the low or getting from a lot cleaner structure perspective, just one more low.
Nice.
But I think we're close.
So to jump to metals, give credit where credit's due, and I think you called it pretty spot on with gold and silver. Just in the last update, we saw gold, go up a little bit, and then it took a $70 tank. So what do you think about that? Like $70 in the gold?
Well, you know, when we sat down last week, I told you we had an inflection point and that our room had sold our metals, or portion of our metals. And yeah, the world was getting all bullish metals right at resistance. And, you know, silver dropped from 24.80 to 24.
Sitting at 22.6.
So that dropped down to 22.20 from where we sold in the
Okay.
24.30, 24.40 region. So yeah, it's unfortunate. It's where we're at in the market right now. And with this drop we've seen, an impulse down gives me belief that we are setting up further lows in metals. And again, I maintain metals to be one of the better performers this year. I am expecting great things from gold and silver. However, whilst we reside below the highs struck last week, we could be in for a 15 handle, even a 14 handle on gold, and we could feasibly be as low as a $19, $20 on silver, which I will be very much looking to buy that region, as I believe it will be setting up a very, very big opportunity on a swing basis.
Nice. Well, interesting to double back on that.
Well, let me just sort of add weight, because there is a chance that we can reinstate the bullish thesis, but we need to get above the highs that we struck last week. As long as we remain below them, we have setups for a significant washout in metals, which will yield a great buying opportunity. So the onus is on the bulls now to prove that they can get back above the highs, and if so, I'll go back to a neutral position. But whilst we reside below the lows, it's now time to certainly be cautious on the metals for the next little period.
Very nice. Question now about still the markets, but slightly more geared towards your trading methodology. And I was curious about validation points and how far back you do look in timeframes to search for validation points and to find an entry for a trade.
Good question. So it depends on what time frame you're trading. So the first thing I do when I look at a chart from scratch is I'll look at it either on a weekly or a monthly chart. Then I'll go to a daily chart and then a 1 hour, 4 hour chart, and so I'll work my way in. So if I'm trading a chart that's in front of me, it's a chart that I know, I'm obviously aware of what's happened before and it's all marked on my chart.
Yep.
So I don't need to refer to a daily or weekly very often because it doesn't change that often. So I'll be looking at invalidation levels for the degree or the waves that I'm trading in front of me. And should levels start to break, I sometimes will have to zoom out again and say, well, what else could it be? So normally on my chart, any given time, I've got thesis or views of what I expect to happen if this happens. So if my primary expectation doesn't work out, what my alt is, and if things start to really look bad, or we get like a Corona style drop or a big drop and things start to break down, then I start to go back to the bigger charts. But normally my validation levels on the smaller degree charts because I'm aware of what I'm trading in front of me.
Nice. Similar to the last one, we'll just cover off the market topics that I wanted to mention, and we'll just do a bit of a Bitcoin, Ethereum question. So I heard two different, forecasts or predictions or analysts. I don't know how to say it, but for Bitcoin, I heard it could get as high as 130 to 230 or as low as 10,000. Just with these wild ups and downs, what can you consider with the crypto market?
So I think the first thing to consider when you hear these targets of 10,000 and 130,000 is people hear this and they assume, okay, that means straight line to one of these levels or straight line to the other level. What the difference is, or the point that what is sort of left out, is the supports along the way and the resistances along the way to reach these levels. It's not going to be a straight line. Markets don't move in a straight line. So yes, I can feasibly see both of those levels being hit, and both those levels being hit in the next couple of years. Would not surprise me. But to reach those levels, the market needs to start breaking significant supports and resistances. So where we are in the bigger picture is, even taking a step back, the theme of this year, which has been, I won't say a surprise, but somewhat a surprise, is the massive correlation amongst assets. It seems the cryptos are following the stock markets tick for tick, and metals quite similar as well. So there is this crazy correlation at the minute, which will break down. It always does. The correlations come and go. But right now, we spoke about the S&P. The Bitcoin chart is almost identical in the sense that it would look better with one more low into the 25,000, 30,000 level before we push higher. But if this rally that we're in now starts to extend past 43, get up to sort of 46,000 level, then we might need to be looking at that retrace as the buying opportunity and consider the lows having already been struck. So I'd much prefer one more low across the board and then the strong rally. That's how the markets are setting up. But I am conscious if we do start to see Bitcoin start to take out resistance levels, then we can start to look towards the potential bottom in. And if the bottom is it, well, then we've got to look on the upside. The 69,000 was the high. We know 77,000 from a fib extension region is significant resistance. We've got resistance in the 85,000 level, and then we've got resistance up to the 110, 130,000. So yes, 130,000 is very possible, but let's make a new high. Let's move above the 77,000. Let's move above the 85,000 and take it step by step.
Yeah, nice. I like that, what you said about the journey. The quote actually did say, 1 year will mark the bottom and then a slow grind up, and then a bull run at 2 years. So it really is just about the journey, and I guess who can forecast 2 years ahead? It's just about what's happening months and months in advance.
Yeah, and I think it's reasonable once we struck the high in this degree, whether it's 70,000 or 80,000 or 100,000 or 200,000, I think it's reasonable to expect to retrace back to the 10,000 region after that. So yeah, I think you could see both those levels hit, just depending what your time frame is.
What galaxy you're in, maybe. Now, you mentioned my next topic actually a little bit before when you mentioned correlations.
Right.
So correlations between currencies, I've been doing a little bit of research about it, and I was wondering whether or not you use correlations between currencies to make additional trades. For an example, if the Australian dollar and the New Zealand dollar are following each other, does that give you an option to make a trade on the New Zealand dollar as well as the Australian dollar, or not really working like that?
Yes, and you can see correlation, should I say, amongst assets. But if you're seeing Aussie strength, then of course it's likely to see that sort of Aussie strength reflected across the various Aussie denominator charts. But I'm a very firm believer in trading each chart on its own. And I don't see a reason to look at the Aussie yen to tell me what to do with the Aussie Kiwi, for example. I can just look at what's going on in the individual chart. And the reason I say that is, okay, with currency is probably a little bit different because, the Aussie dollar can show strength or weakness and that can be reflected. But, something about like even the NASI and the S&P, you often find them in different junctures, especially now. You saw how much further the NASDAQ fell than the S&P on this recent decline. And gold and silver, you saw before this move higher, there were days where gold was flat and silver was up 30, 40, 50 cents. So it's very important to note that correlations do exist, but correlations do come and go. So now we're talking about the S&P and Bitcoin. You go over Twitter and everyone's talking, every Bitcoin trade has an S&P chart up right now. It's uncanny. That will change, and nobody knows when that correlation is going to break. So why not just look at a Bitcoin chart to decide what to do with Bitcoin, as opposed to relying on the S&P because it's showing that correlation right now. So correlations come and go, and you cannot rely on it as a trading tool. Can you use it? Yes, there are ways you can use it to incorporate it. I'm not anti-correlation, but I just think, well, why do I need to look at a dollar chart to tell me what gold's got to do, or look at a Bitcoin chart to tell me what the S&P's got to do, when I can just look at the actual instrument chart?
Yeah, I was going to say, for sure, I agree. And one thing I've definitely noticed with correlation is that if some people will jump onto their trading platform and look at all the different charts and open up positions across, say 10 different pairs, but if they don't look at the correlation, all of them could be almost, 90% correlated, and you're increasing your risk going in the same direction across 10 pairs. So yeah, there's something to be said, I think, about, looking at correlations with your positions to ensure that everything's kind of balanced. And, if Aussie US and Aussie New Zealand are pretty much like 90% correlated, and you have a position on both, you're pretty much doubling your risk. So
yeah, that's a very good example of it. You might like a chart, and by trading the correlation chart, you end up with triple, quadruple the exposure, which on something that's going to likely move in the same direction.
Very interesting. On to the next topic. This was one of the topics that I thought could be a pretty interesting discussion with Jeremy in the room, actually. There's a large, well, I don't know about large, but there's a pretty big, large amount of numbers of people who want to accept their salary in Bitcoin. It seems like a lot of athletes, really. I'm not too sure what the go is with that, but there's a lot of companies that will take your salary from your employee and convert it to Bitcoin at whatever the current value is, and then spit it back out as your pay. So my question was, would you, I guess two-part question, would you consider getting any of your salary set apart as Bitcoin or another crypto? And then what would be the implications if a lot of people do start receiving their money in Bitcoin? What could that do to the price of cryptocurrencies? And I guess, could it devalue it? Could it raise it? That kind of...
Okay, I thought that would be a good answer, question for Jem to answer, but I'll take it.
Yeah.
You are seeing a lot of it, and it is quite popular among sports stars. Why? Because sports stars have a lot of money, and it's another way of getting different currency, and it's almost a movement that you've seen amongst even artists, sports stars, sort of high-profile people who have a lot of money. And there is a belief, whether it's going to stick or not, or Bitcoin's going to be the one, that it might be the next currency that takes over. You know, if you look at where fiat currencies are right now, if we take a step back and we look at countries which all have massive amounts of debt, they're devaluing their currency at excessive rates, and interest rates still sitting at zero, you know, there's an argument that the game's up for fiat currency, or at least there's certainly devaluation of it. You know, look at inflation right now. So by holding fiat currency in a bank and earning 0% or 1%, whatever you can earn from it, and losing out to 7-8% inflation, you're actually purchasing power losing a significant amount per year. So there is a belief, well, why not just invest in Bitcoin or have it in Bitcoin? So yeah, there definitely is a move towards that. I do think we are moving to a stage where there will be a digital currency which will take over, whether that's Bitcoin or a new variation or whatever, you know, or one of the other coins already out there. Yeah, certainly something interesting.
I think personally, if I get paid, even though I'd be paying myself, if I get paid in crypto, I'd be interested in probably taking a portion of my salary in crypto and then kind of like dollar cost average into that asset class. But it'd be pretty cool if someone made a protocol that you could really just choose how you want your salary structured. I want, you know, this much going to the S&P. I want this much going into tech stocks. I want, you know, this much going into crypto.
Just be fully invested at all times.
Yeah, and then maybe you could probably get paid in, you know, some stable coins as well, and then get yield on it through some of the DeFi yield protocols.
But if you're fully invested, then how do you pay your rent, or how do you
not fully invested? That's why
how do you pay your groceries?
Yeah, it's a percentage. I would never get my full salary in crypto.
Well, there might be a situation where crypto becomes the fiat currency, and you know, people in 20, 30 years might not know any better. It might be just the standard norm.
Yeah, I mean, I personally see fiat currency definitely, like what you're saying, gets devalued in certain places, or it does anyway. Over time, your purchasing power goes down. But yeah, I think more the, you know, centrally backed kind of cryptocurrencies where the governments make their own currencies is probably what we're looking at next.
Agreed.
And it's just more of the same, really.
Agree. I think we're more likely to go down that path, but definitely fascinating times, and we're even discussing it. It shows you the mess that the governments have made of since the easing in 2009.
Speaking of governments, India has just kind of agreed to play ball with cryptocurrencies and added a 30% tax to crypto sales. And I hear they're about to implement their own currency. So you're right, really, governments implementing currencies could be the new way that we're going about this.
Did you say 30% tax?
30%. It's tough.
That seems quite excessive.
Yeah. Anyway, it kind of leads on to my next question, which is about journalism and news articles. I read that quote from a news article, which is kind of actually indicative of the next thing I'm about to say. Recently, you've been doing a little bit of media, Greg, and it seems like you've been misquoted in a few of what you've said, a few of the things that you've said, and it got me thinking, if somebody can get misquoted, especially with financial news, that has, for whoever takes the advice, some serious repercussions and I guess financial repercussions. So my question is, what standard should we hold news outlets and journalists to getting this kind of financial news right? Fair bit with celebrity gossip and whatever, but financial news seems to have more of an onus on actually being accurate.
Well, I come as no surprise where I've said multiple times to ignore news headlines when you trade.
Preach it.
And that's even if they're accurate. Forget when they're not accurate. So yes, I've had an interesting time with one of the articles I did where I was misquoted, and I kicked up a bit of a fuss, and then another article came out with me being misquoted again. So yeah, I can't say I was best pleased, but if it's happened to me, I'm sure it's happening to many, many other people out there. So yeah, at the best of times, I don't trust the news articles. Again, a lot of it is lazy journalism, and I understand it. You know, if you being told to give a reason on why gold moves every single day, even if it moves in a $5 range, you've got to start getting creative, or you get your standard templates that you just shove out. Gold up due to weak dollar, or gold up due to tensions rising in Ukraine. And these things just get spitted out because they have to be posted. But if you went to somebody and said, what's your views? Tell me what your thoughts are on gold. You might get an overall picture and accurate information, or information from people who have actually thought about the subject, not just regurgitating. So, yes, that lesson has taught me that I guess that a lot of what you read is actually a misinterpretation of what other people are even saying. So
it gave me a great opportunity though, because I kind of went onto the back end of one of those news websites and took an article and changed the text around to make it, obviously wildly unbelievable what I changed your quote to be. But I sent it around to the work chat and freaked you out a bit. So I'm kind of happy that it happened.
The first time I saw that, I was like, hang on a second. I was like, nah, Jem's posted. He's up to something. But yeah, it's the world of news trading. Something I highly recommend against.
Tread with caution on the internet, I guess, is a great rule of thumb.
Yeah, again, look, there is some good information on the internet. You can't deny it. The problem is, between all the good information, there's so much incorrect information. So how do you wad through that, knowing what's right or what's wrong? And, we spoke about this a while back. We were saying, mentor rooms or learning groups where you can discuss or make views of thought process of the information. But yeah, you just got to be careful that you don't take everything as gospel what you read.
Yeah. Very nice. So we're just at the half an hour mark now. So we're going to do a quick outro. Jeremy, do you have something else to say? You're just leaning in.
Not really. Everybody have a blessed day. Thanks for joining, and I look forward to seeing you next time. And I'm really glad I had a lot of input on this one. So yeah, trade safe.
It was great to have you in the room.
So last few things. We've got a Discord, community Discord. All the traders are more than welcome to jump in. It is completely free to join. We have a paid mentor room, but our Discord where you can chat to us, the stuff at Global Prime and all of our traders, completely free to join. So definitely check out our Discord. We've got Greg running our mentor room at the moment. So jump in. Greg has a 2-week free trial. So if you are curious about any of this chart analysis, all the live streams that we're talking about, Greg's got a free mentor room for you guys to check out, and it's full of great information. Other than that, check us out on social medias. We love posting these videos on YouTube and on our Facebook page. So give us a like and a share. Ratings would be much appreciated. And lastly, check out the Global Prime podcast. We've got this coming out as digital versions on all podcast platforms, but in particularly Spotify is the easiest way to keep up to date with Global Prime audio releases.
Are they paying you for that, Spotify?
No, not yet. But I don't think Spotify really pays anybody. It feels like they're pretty lovely people, of course. Thanks for another weekly update, Greg. And we'll see how these markets fare in the next coming days, and we'll see how we all go. Thanks for coming on, guys.
Thanks, Lucky.
Just one more thing. I love how Lockie's keeping you honest. He's like, checking in on what you said last week and seeing what the markets are doing. It's pretty cool. So,
got to be held accountable.
Yeah. We'll see you next time. Thanks.
Cheers.
Thank you.
Bye.